Hey guys, hope everybody's doing well today. I've got some interesting things for you, and I just want to preface this by saying that in 2008 I came out with a video course called Trading as a Business. A lot of people may have purchased it under a different title because I had private labeled it to another marketer, and I think his title for it was Trading Pro System. So in any case, the videos that you saw were primarily about generating income through options. And as good as that course was, and it was really, really good. I mean, I got incredible amount of feedback for it. There were two problems with the system. Number one was that you had this tent in which you were making your profits. And if prices moved outside of the tent, from the center of the tent to the right or to the left too far, you were losing income. You wouldn't get as much income as possible. And it required, number two, it required adjustments. And so in order to keep your tent in the center of the current price, you had to constantly adjust your tent through either calendar spreads or through condors, selling condors, or bull call spreads or bear call spreads. And you had to do a number of different adjustments in order to keep your maximum profitability in the center of that tent. And that tent is your profits. And if it goes outside, if we have a big sell-off, if we have a big rally in either direction, if price moved, you would have basically a losing position, or you'd make very little income. And the margin requirements were also gigantic because you had an enormous amount of risk if the price moved outside of those tents. And so for the past, this is 2022, since 2008, for 14 years, I've been thinking about how it's possible to create option income without taking on huge risk or high margin requirements. One of my favorite strategies is simply selling individual puts on stocks that I like to buy in the future. Now, that works great in an uptrending market. But if we're in a sideways market or a downward trending market, it doesn't work so well because you end up getting stuck with stocks that end up going lower. Also, if you do a lot of credit spreads, so if you have a lot of credit spreads, those can also work very well as too. But generally, the credit that you received compared to the margin that you have to put up, you can only do those on either larger accounts or you're only going to be able to do one or two credit spreads on smaller accounts because the margin requirements are so high. And so when I mention butterfly spreads to people, they're like, oh, you got to hit the tent exactly, otherwise you don't make any profit. You can't put these on as a credit spread, so you have to do them as a debit spread because market makers don't take them. And that's true. That's true, and that's the way most people teach it, is that you can only put them on for debits, that you have to hit it exactly at the strike price in order to make any income from those kind of trades. And I started to think about it a little bit more. And as I mentioned in the past, I have a mentor that was a market maker on the CBOE for 20 years. And so I asked him, I said, I'm looking for something to generate more income. I really liked Trading as a Business because what it did was it allowed you to do options for income, but the adjustments are really a problem for a lot of traders, especially a lot of retail traders, because you're constantly adjusting your positions. You're adding more commissions and you're adding more margin. And so you can only really do those with a very large account size. What can you do with a smaller account, maybe under $10,000 or even $5,000, that doesn't have the large margin requirements, but still can generate potential for a very good income? And so he said, well, when we were in the floor of the CBOE, we basically did a lot of butterflies. I said, butterflies don't make any money, do they? I mean, you have to hit it exactly right in order to generate any income. He said, not the way we did it. Now, because he was a CBOE market maker, he only paid the clearing fee. He didn't have to pay commissions, right? So that was a big advantage for him 20 years ago when he was still doing market making in options. Today, commissions have come down tremendously. So at that time, it was really prohibitive for a retail investor to go out and do butterfly spreads because the commissions would just eat up any of the profits that you had. Profits were generally pretty small. Today, there are brokers, and I've mentioned a couple, if you're in the high-level mentoring or if you've taken some of the other courses, you notice that I've kind of gone from TD Ameritrade to doing options to Tastyworks. And Tastyworks' advantage, in my opinion, okay, you might have other brokers that can do even better commission rates than Tastyworks, but it's $10 a leg and 10 cents for clearing fee. And it doesn't matter how many options you do. It's $1 an option for under 10, and it's a $10 for one leg of 10 options. Or if you do 20, it's still $10. If you do 40, it's still $10. If you do 100, it's still $10. So the commission rate is extremely good, and the closing commission on Tastyworks is 0. So you're paying that $10 for the 10 contracts on a single leg one time. That's it. So you get to close them out at no commission cost. Now with Thinkorswim, I love Thinkorswim. Love these guys. I think they got a great platform. I always thought they were a great platform. I've been using them for over 20 years. They have commissions to get in. They have commissions to get out. Lowers your profitability, especially on a position like a butterfly. If you're not familiar with a butterfly, go look it up at Investopedia, take a look at it, and you'll see that it typically has a graph very much like the one I'm going to draw for you right now. So let me do this. I'm just going to draw a little graph here. And basically, here's the 0 line. This is profit, and that's loss. And a typical butterfly is going to look something like this. You're going to have a small loss on either side of this, and then you're going to have a kind of a peak in the center where your short strikes are, and then you're going to have a small loss going to infinity to the right side, infinity to the left. Well, not infinity to the left side. If this is, let's say we have strike prices here of 20, 25. We'll call this 30, 35, and 40. So if we have a butterfly spread on, generally what you're doing is you're selling 2 contracts minimum at the 30 strike price, and you're buying one either at 25 or you're buying one at 35, or if you have dollar increments, you can do that on the option chain. But you're buying one here, you're selling 2 here, and you're buying one here. And that's how most people look at butterfly spreads, and they say, well, if you don't hit it right, if you don't hit it exactly at expiration, and you're not at 30 strike price, well, you're not going to make any money. And the commissions that you would normally pay would be eaten up by the spread itself. And then, of course, you have a built-in loss because there's almost no market makers in the world that will give you a butterfly spread for a credit. Because if it did, then your graph would look, instead of like this line down here, your graph would actually look like this. So you'd have a very, very small, thin profit on the position instead of a guaranteed loss if it goes above or below the short strikes. And so there's no way that a market maker is going to give that to you. So you're going to buy them at a debit. Well, as I talked to my mentor, I said, look, I'm getting older. I really don't want any major risk here in my portfolio anymore. I do short-term trading. In fact, we have classes on short-term trading and in the high-level mentoring program. And I do that from 9:30 to 11:30 almost every day. Not every day, but almost every day. And so that's the sweet spot for me to do short-term trading. And that's it. That's all I really want to do. I don't really want to have any positions that are going to tax my time because it, is like I said, at this point in my life, really what I want to do is maybe spend an hour, 2 hours trading every single day, and then goofing off or reading or traveling or doing whatever I want to do, so I'm not tied down to the computer monitoring positions on a day-to-day basis or even on a hourly basis. When I was doing trading as a business, so I'm doing these large tents in which I'm let's say I started out with a butterfly, and then as price moved here, I'd have to do an adjustment here in order to widen out the tent so that my profit tents became wider and wider. And as the market either moved up or lower, I'd have to do another adjustment over here to get the tent wider and wider. And those adjustments were really time consuming. Margin requirements were high, as I mentioned. And, if it kept moving, I'd get smaller and smaller profits for every adjustment that I made. And so that was kind of the downside to that system. Now, the system, in a stable, relatively bullish market, it worked very, very well. But I don't think we're going to be in that type of environment within the next couple of years. And even if we are, even if it continues to go higher, the market really has some surprises in store for everybody at some time during that bull run. And those surprises usually are to the downside. And so you spent all this time creating a beautiful tent in which you can make beautiful money on the income side of the trade, and one downside event can wipe out almost all of your profits, so you end up down here. And instead of, let's say you were going to make $4,000 here, you're only going to make maybe $500 or less here after spending a month adjusting and adding and creating this position. So those kind of things can happen. And so what I wanted to do was say, hey, look, is there any way that you can actually create butterfly positions? You said you used them on, I talked to my mentor when I was talking to him. I said, is there any way that, how did you do this? Because maybe 20 years ago for the retail investor, it wasn't viable because of the amount of commissions that you had to pay. But now commission costs are relatively low. How did you do it? What did you do? He said, well, I didn't really talk about it much because it's rather boring. And I said, I like boring. Boring is good. What did you do? So he said, basically what we did was we took a position in which we were able to get a butterfly for a credit or zero debit. And so what would happen is we can create butterflies that had a zero debit, which meant that basically we lost nothing. It was a risk-free trade with a low probability of success, but it was a risk-free trade for each one of these. And so what he would do is he'd say, look, what we did was we would take butterfly positions, and then we didn't enter them as butterflies. So in other words, another market maker or somebody else isn't going to allow us to take these butterfly positions at a zero credit or a zero debit or a credit. And so this is how we entered him. So he went through this entire process of telling me exactly how he created butterfly spreads, which became his bread and butter trade during the time in which he was a market maker. And it just fascinated me. I said, well, yeah, that's kind of exactly what we look for. Like I said, it doesn't, 20 years ago as a retail trader, even 10 years ago, even 5 years ago, you could not do this as a retail trader because the commissions would just eat you up. But today you could do it. You could do it successfully. So let me go over to Thinkorswim here for a second. Whoops, I have to get out of this. I am going to do this and bring this up. Okay. So this is these are positions that I've entered recently. And you can see that it's kind of like trading as a business a little bit because it does have a tent. And because they're butterflies, they do have some spikes from here and there. And so, but there's another important aspect to this particular type of trade and the way he trades the butterflies. And the way when I heard him talking about it and the way he explained it, I said, that's really a better butterfly. He said, yeah, it's a better butterfly. So that's why we call this program the Better Butterfly. Because it allows you to enter a position without any adjustments. So you don't have to do any adjustments whatsoever. Number two, margin requirements are minimal. So for example, this one particular position, I can't lose money on. Let me kind of squeeze this out a little bit here so you can see the wings on both sides of these. And there it is. It's a little slow in rendering. There we go. So on the wing side, I have a built-in profit of $930 on either side, on the right side, on the left side. If it fails to settle, this is on the diamonds, if it fails to settle between 332 and 338, I still make money. So on the wing side, on a typical butterfly, you're going to lose a little bit of money. On this one, I'm actually making $930 on the position. Maximum is the center of the tent at $4,808. There's a couple of other tents on either side at $3,880 if I hit it, and $2,900. So in that area someplace. Now this is getting close to expiration. These are the April. This is April 28th, and these are weekly options that expire tomorrow. And right now, the price is at $338. Now, if it settles right here tomorrow, that would be wonderful. I'd make about $3,800. As we all know, however, the market does fluctuate on a daily basis. So we could end up anywhere in here. We could be 338. We could be down here at 334. I'd make $1,600. If we settled way down here, the worst case scenario, 930 if it goes outside, 971 here at this low point, or it's about 942. This low point right here is about 975 is the lowest maybe. And so I can't lose money on this position. So there's no adjustments. So once you put these positions on, there's zero adjustments. You don't have to do anything. The only thing that you want to do is as you get into closer to expiration, you kind of want to see how they're going to settle. The second thing is that the margin requirements are minimal, because in most cases, the way that he taught me to do this was that you can actually put on a butterfly for a credit. Now, I didn't think that was possible. I didn't think it was possible because I've tried to do butterflies before, and I've entered them as a penny credit, for example, and I would not get filled. You just can't get filled on a penny credit on a butterfly. But he taught me how to do it. And so once I learned how to do it, basically if you can enter a traditional butterfly at 0 credit or a minus like a 1 cent credit, the only thing you're going to lose is the commissions. And the commissions, as I mentioned, have come down so much that the risk is really quite minimal. Anyway, I teach this, plus I teach what I call, this is what I call a butterfly bomb, because basically you're setting landmines and you're just collecting them. So if they hit your strike price, they explode, you make massive profits. It's kind of my tongue-in-cheek way of describing the system. And the better butterfly is actually a butterfly that has a slightly different graph than this, but it makes money 3 ways. If the market stays where it is, it can go up a little bit or it can go down. And so it's slightly directional. However, again, margin requirements are fairly minimal. If this is something that interests you, if this is and the reason why it would interest you is because there's no adjustments. Monitoring, simple. I mean, you could do it daily if you wanted to. You could do it every couple of days. You could put them on and just wait for expiration. As long as you follow the directions that I give you, as far as entering and exiting these positions, minimal risk, minimal commissions, no adjustments, and margin requirements are ridiculously small. And at this point, because we're getting close to expiration, I can't lose money unless I don't even think. I mean, we can go way out here. I mean, the market would have to move. I mean, maybe if it moved 10,000, 20,000 points on the Dow and maybe 1,000 points on the S&P, maybe there's a way I could lose money. But the way these are structured is that basically you can't lose money. I've never seen, and it sounds unbelievable almost, but if you do it the way I teach you to do it in this course, you're not going to lose money. You're going to lose commissions. Now, you might lose a little commission, but on the position itself, it's going to have extremely low risk. And if you do them as a credit, as I teach you, you can't lose money on the core position. You're going to get them as a credit. You can't lose on the core position. You're going to lose money on your commissions. You're going to have to pay the commissions, absolutely. But these commissions, now this particular, this trade right here that I have that expires tomorrow, the commissions on this was $120. Plus, so I had 120 contracts, or I'm sorry, I have 12 legs. I have $120 in commissions because I'm using Tastyworks, not Thinkorswim. I'm only using this for example, for demo purposes, because they have a nice, analysis graph here and risk profile. But so I paid, it was 12 legs. I paid a $10 commission on each leg, plus 10 cents a contract, so it was another $20-$30. And basically, there's no risk to me. So you take the worst case scenario is if the market comes over here and I've got $930 in profits at expiration, minus the 120 plus the clearing fees, I would probably end up making about $700 and $750, someplace around there. So this is something that appeals to me because, number one, the commissions, the adjustments, the load margin requirements. So at that point, anybody can really do this. Even if you have a smaller account, if you got a couple $1,000s in your account, you can put some of these on. If you have a $5,000 account, you can put some of these on. If you have a larger account, you're going to absolutely love this because it's going to be able to and allow you to generate income on a regular basis without the margin requirements of credit spread, without the risk of selling individual options on stocks like puts or calls on individual stocks, and then getting stuck with those stock positions if they go in the money and they get assigned to you. So this is really something that I think is really good for anybody who doesn't have a lot of time to invest in adjusting option strategies and positions on an hourly, daily, weekly basis. You can do these at your leisure. You can put them on. You can kind of leave them alone and let them just kind of run and harvest them at some point in the future, and do them on a weekly basis. So you don't even have to do them. You don't even have to do them 45 to 60 days out. The Better Butterfly works better if you do it, but the Butterfly Bombs that I'm showing you right now don't necessarily have to be on for weeks at a time. In fact, the video I'm going to be doing tomorrow actually is going to be part of the course, is the expiration of the Butterfly Bombs that I have on right now that you're seeing will expire tomorrow on April 29th. And so you'll be able to see exactly how they expire and see what happens. And there is one more advantage that I hadn't mentioned yet. And that is that these butterflies pretty much neutralize the Greeks. So for example, you can take a look down here at the delta, the gamma, the theta, and the vega here. You can see that for the most part, the theta is pretty good. It's $46, 33. At the current price is about $33, $34 a day. And the gamma is almost nothing yet. Now tomorrow, and actually we're only one day from expiration, so typically the gamma explodes going into expiration. And so tomorrow, when I do the video on the update for the course, we'll take a look at the gamma and see how it's reacting. The delta is slightly negative because I skewed this because the market's been going down a little bit, so I have a slightly negative delta. But the only thing I'm really thinking about at this point is seeing if we can get the current price to settle inside one of these tents. That's all I'm really interested in, because that's where I make the most money. And if it doesn't, if it goes inside, outside, in between, it doesn't matter, because I still end up making money on these. It's incredible, actually. In probably the 40 years that I've been trading, there's always a risk, a big risk in trading. And this is no different. There's going to be risk in trading this. But boy, I haven't seen any strategy that is this low risk with a potential fantastic payoff in my 40 years. I love it. I just absolutely love this strategy. I don't want to say that this is the greatest thing since sliced bread, but this is a strategy that I haven't seen in the 40 years I've been trading that's been viable, until now, because of the low commissions and the absolutely fantastic ability to be able to put these trades on in a way that you basically let the market come to you. So when I put these on, I set the rules. And if I don't get them, then they don't get filled. And the only way that I actually do these is to set them up so I'm able to get the butterfly at a credit or zero debit. And when you do that, look it up, do your research, do your due diligence. You can't lose money on it. The only thing you would lose is your commissions. So this is very different than anything I've seen before. I don't think anybody else is teaching this. Most people who teach butterflies, go to YouTube, go ahead, put it in, say butterfly spreads. How do I do a butterfly spread? And take a look at some of the videos. They have no clue how this really works or how market makers use them, like my mentor taught me how he used them when he was on the floor. And when you learn how to do this, it's really going to open your eyes to the potential, because there isn't another type of strategy that you can use that has this low of a risk. Low risk, potential high payoff, no adjustments, low margin requirements, and low maintenance and monitoring. You're not going to find anything else like it. Anyway, guys, I wish you the best. I am available for questions if you have any at support@tradingology.com. Dan will receive the email. He'll pass it on to me. I'll respond to you with any questions that you have. And I wish you all the best. And, good luck. This is I wish I started doing this years ago, but like I said, for retail traders, it really didn't become viable until just maybe 4 or 5 years ago. So I'm 4 or 5 years late but better late than never. All right, guys, have a good one. I'll talk to you again soon. Bye.